Coming up on Market to Market. Flames ravaged the Mountain West in one of the most destructive wildfires in Colorado history. California growers battle an employment shortage and shifting immigration policies near America's salad bowl. Those stories and market analysis with Jamie Kohaki next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, June 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. While the collective eyes and ears of Washington were centered on a set of 9 judges this week, global economic leaders were staring down the financial gun barrel in Europe. European leaders claimed a breakthrough Friday in an effort to stabilize Eurozone credit markets and strengthen the region's banking system through centralized regulations and more liberal use of collective bailout funds. Despite many details left undecided, global markets in London, Frankfurt, Paris, and Madrid all trended higher Friday. Back in the U.S., congressional leaders took steps to prevent another debt debacle from growing, this time in student loans. Both chambers passed a highway projects bill with language aimed at preventing student loan rates from doubling on July 1st. At the Internal Revenue Service, federal number crunchers have identified 2 million potentially fraudulent tax returns last year. The IRS fraud detection system recorded a 72% jump over the previous year. Taxes were a central focus of the U.S. Supreme Court as well. In a controversial 5-4 decision, 4 liberal jurists joined conservative Chief Justice John Roberts in ruling the Affordable Health Care Act constitutional under congressional taxation powers. The most important Supreme Court ruling in a generation sent shockwaves through Washington as President Obama claimed victory. Republicans vowed the ruling will serve as an election year battle cry, stirring a political firestorm in the months ahead. But America's largest flames were seen more than 1,000 miles away from Washington along the Rocky Mountains, where firefighters are battling some of the driest and most destructive fires since 2002. Wildfires ravaged portions of the Mountain West this week, consuming thousands of acres and forcing evacuations in many locations and causing at least 1 death.
We have been putting everything we have into trying to deal with what's one of the worst fires that we've seen here in Colorado. And it's still early in the fire season, and we've still got a lot more work to do. But because of the outstanding work that's been done, because of not only the coordination, but also some unprecedented arrangements that have been made with military resources combined with the civil resources, we're starting to see progress.
At least 30,000 residents have been forced from their homes and kept at bay as crews tried containing the fires in what Colorado officials are calling the worst wildfire season in a decade. The High Park Fire, the second largest in state history, has burned through more than 250 homes across almost 88,000 acres and will cost around $33 million to the region. That blaze was started by lightning. But not all fires may be Mother Nature's doing.
What we want to make sure is we don't jump to conclusions, or we want to make sure that we are judicious and cautious in our approach. But just the very thought that somebody would be out there trying to cause a fire, right? An arsonist who, for some strange kick, gets joy out of this. I want to make clear that we would throw the book at them. In conditions like this, where it is so dry, and just to think about putting people at risk like that, it I think drives everybody crazy, right? It makes your blood boil.
In Colorado, 10 forest fires are burning. One of the newest hotspots was in Colorado's second largest city of Colorado Springs, where more than 340 homes burned to the ground and flames threatened the U.S. Air Force Academy. Only 10 acres were charred at the academy. Strong winds also fueled the blaze as more than 700 firefighters battled for 100% containment.
When you're getting the thunderstorms and the continual lightning, you've got the potential for new starts. Once that clears out and we get a warming trend, then we get the warmer, dry weather, and that's always a concern, especially if we have a lightning strike out there that wasn't detected, or what we call holdovers, that could potentially burn. The fuel conditions are record-setting right now in the state, and so as the temperatures get warmer and drier, there's always that potential.
The fire that destroyed hundreds of homes in the Colorado Springs area is still too dangerous for investigators to begin tracking down a cause. The Colorado fire is one of the many burning across the parched region where moisture has become scarce. Blazes have destroyed structures and prompted evacuations in Utah and Montana and forced the closure of a portion of Zion National Park.
We average over 70,000 wildland fires across this country every year, and the majority of those are human-caused.
The University of Nebraska-Lincoln's drought map shows the progression of dry conditions in the Mountain West region. In recent weeks, drought situations spread into the Corn Belt, where temps pushed above the century mark across the Midwest. It was a busy week for America's judicial branch. In addition to a landmark health care ruling, the Supreme Court issued a mixed directive on the controversial Arizona immigration law known as SB 1070. In a 5-3 ruling, jurists upheld a provision allowing local and state law enforcement officers to check an individual's immigration status during regular stops. But other provisions were cast aside, including criminal charges for any illegal immigrant seeking work in Arizona. When the law was first proposed, the now defunct worker ban sent shockwaves through western farm fields in neighboring California. Farmers are still coming to grips with a dwindling supply of workers. And as David Miller explains, immigration is far from a settled issue for growers hoping to pick a mountain of vegetables in the nation's salad bowl.
A good share of the nation's winter fruits and vegetables are grown on nearly 3 million acres of irrigated cropland in California's Central Valley. Water and labor have a unique relationship in California. Without the water, there are no crops. Without the labor, the crops would never leave the field. In 2009, reduced snowpack in the Sierra Nevada mountains caused a reduction in water to Central Valley farmers. The loss triggered an avalanche of unemployment that hit over 40% in some valley communities. Joe Del Bosque is a second-generation farmer from Firebaugh, California. Del Bosque idled more than a third of his 2,200 acres during the drought, diverting precious water from vine-ripened fruits and vegetables to his fruit and nut trees.
We've had those cutbacks for 20 years here in agriculture, so we understand them, and we've kind of learned to roll with the punches. It's not easy. If we had 2009 again in 2010, I may not be standing here because we could roll through 1 year but not through 2.
Besides trying to get and keep fresh water in the nation's salad bowl, the combination of a 50-year-old infrastructure and demand from 37 million citizens has placed a huge burden on the state's water supply. To combat cuts to Central Valley farmers, California voters will decide in the fall if $11.4 billion in improvements are going to be made to the Golden State's aging water system. But even if water allocations return to 100%, getting the fruits and vegetables out of the field remains a problem for Central Valley farmers. As immigration regulations have been tightened over the past few years, the number of people available to pick, process, and pack fruits and vegetables has declined.
Number one, closing the borders has affected our labor. Number two, fewer people are immigrating from south of the border into our area. And number three is we have a government that can't seem to get together an immigration reform plan, and we desperately need that. If we had a law here in California like Arizona, our fresh fruit and vegetable industry would be dead.
The Pew Hispanic Center, a nonpartisan research agency, says there are approximately 11 million illegal immigrants in the United States. The U.S. Census Bureau believes there are nearly 2 million undocumented workers in California. Some of them are helping bring in the nearly $40 billion worth of fruits and vegetables produced in California farm fields annually. While the work is labor-intensive, farmers in the region say they only need people for a limited time each year.
Our demands for labor out here are seasonal. There are huge demands in July, August, September. There's not enough people here to fill those demands. So we really need to have a guest worker program to allow people in legally, pick the crops, go back home. It's truly my belief that if we'd had this 30 or 40 years ago, we would not have the immigration problem that we have today.
Daniel Jackson is an eighth-generation farmer from Reedley, California. Jackson believes most of the immigrant workers he employs to pick and process the bounty from the family's 4,000 acres of fruit trees want to earn money and return to their homes across the border.
Our labor force that we have is predominantly maybe 99% Hispanic. A lot of these people are coming from other countries, and we need immigration reform. We do, no doubt about it. There needs to be a lot of reform done for our labor force to be able to get up here to work legally, not take advantage of our tax system. Nobody likes that. And then to be able to go back home and stay there for 4 or 5 months and come back and work if they wanted to do that.
A recent CBS New York Times poll showed more than 60% of Americans felt illegal immigrants should either be allowed to apply for U.S. citizenship or stay as guest workers. Opinion polls aside, Jackson is among the farmers and ranchers in the Central Valley who have attempted to get unemployed American citizens in the area to help during labor shortages.
We have gone to the unemployment offices before and asked for workers. And one day we needed 300 workers to come out and pick zucchinis for us. And what ended up happening they were very excited. They gave us all the applications. We were excited. The next day, when we were ready to pick, 10 people showed up. That's the reality of it. The reality of it is people that are unemployed or that are here as Americans do not want to do agriculture jobs, period.
Manuel Cunha is president of the Nisei Farmers League, a San Joaquin Valley-based farmer advocacy group with 1,100 members.
Because U.S. workers will not work in this type of work. They refuse to work in it. The only way they're ever going to work in it, and God forbid that we go to a real depression of 1929.
During the Immigration Amnesty Program in the 1980s, the Nisei Farmers League helped the federal government process undocumented workers.
So we're in a situation where we rely on our farm employees that are here in this state to have a job and to farm that land with our growers. So we need that labor. But to do that, we got to have the water. If I don't have the water, then I'm going to lose all those workers. And after a while, if I don't have enough water here all the time, they're going to leave. They're not coming back here. What happens to that production? To the tree fruit, the grapes, the almonds, the walnuts, the vegetables. They all begin to start to dry up. Because at the end of the day, I've got to have a workforce. And if I don't have a water system and I don't have an economic system of water, then I can't grow these crops. So then I might as well just turn this valley and other areas into urbanization and just build houses, because that's what I'm going to plan to do.
Cunha, Jackson, and Del Bosque are like many farmers in the region who believe the answer to the immigration problem in California requires cooperation among politicians on both sides of the aisle. But at the end of the day, Del Bosque and others will continue to focus on things close at hand.
Our goal is to feed the nation.
For Market to Market, I'm David Miller.
Next, the Market to Market Report.
Buy for me the rain, my darling, buy for me the rain. Those are the familiar musical lyrics for longtime viewers of Market to Market. It may also be a tune hummed throughout sections of the Corn Belt this week. Dry conditions and record-setting heat could make for a long summer in rural America. Against a weather-dominated week in the markets, USDA released its latest planting report, and record acreage numbers have not been seen like this in 75 years. According to the U.S. Department of Agriculture, corn stocks on June 1st totaled 3.15 billion bushels. That's down 14% from a year ago. The federal agency estimate shows a 5% increase in planted corn acreage this year. The 96.4 million acres are the most planted since 1937, when an estimated 97.2 million acres were planted. Dry conditions continue to negatively impact crop progress reports, with 14% of the nation's corn crop now rated as poor to very poor. According to USDA, more soybeans were planted this year as well. 76.1 million acres in 2012, up 1% from last year, and the third highest number on record. Soybean storage was pegged at 667 million bushels, an 8% increase from a year ago. Dry weather has also dealt a blow to soybeans, with 15% of the crop now seen as poor to very poor. America's wheat crop is estimated at 56 million acres, up 3% from 2011. Wheat storage, currently at 743 million bushels, is down 14% from a year ago. So far, 59% of the winter wheat crop has been harvested, with 90% of the Kansas harvest complete. A heat wave fried the country's midsection this week. By Wednesday, the hottest spot in America was not Death Valley, but instead Hill City, Kansas. The rural town in the heart of Kansas wheat country registered a blistering 115 degrees. The persistent heat and already dry conditions weighed heavily on the markets. For the week, September wheat gained 70 cents, while the nearby corn contract moved 70 cents higher. Soybeans also rallied this week as the August contract posted a weekly gain of 55 cents, while nearby meal prices gained nearly $9 per ton. In the softs, cotton continued the bullish trend as the December contract settled Friday with a weekly gain of $2.21 per heavyweight. In the dairy market, August Class 3 milk futures gained 44 cents, while the September contract moved 53 cents higher. Livestock prices were mixed this week. The August fed cattle contract gained $3.55. Nearby feeders were off nearly $1.35, while the August lean hog contract gained $3.40. In the currency markets, the euro gained 96 basis points against the dollar. Crude oil rallied this week with a jump of $4.93 per barrel. COMEX gold gained $37 per ounce, and the Goldman Sachs Commodity Index was up more than 36 points to settle at 602 even. Here now to lend us his insight on these and other market trends is one of our regular market analysts, Jamie Kohaki. Jamie, good to have you. Welcome back.
Thanks, Paul.
First, we got to talk about the Dow. The stock market jumped up, had a nice rally at the end of the day. What drove that?
Really, it started Thursday night. We got news out of Europe that Germany finally caved in. They've been saying no to bailouts, stimulus, anything to help the pigs. Portugal, Italy, Ireland, Greece, Spain, all of the nations that are in default watch. And they caved in late last night, Thursday night, and said we are going to go ahead and financially back Greece and Spain with some bonds. And what that did was that rallied the euro and really sold the dollar off big time, over a full point sell-off on Friday with the dollar index. And the cumulative effect was that it was pretty much a rally in the raw commodity sector. Crude up over $5 a barrel at times on Friday. Massive short covering rally there. Crude had been on a $30 a barrel sell-off here lately, and it's the last day of the month, last day of the quarter. Throwing some semi-bullish news, and everybody was just banking profits and just saw a massive move.
It's really going to kind of make the market look like it had a good month, when in reality, oil really took a beating this month.
It really did, and same way as metals as well. They haven't been doing much either. Silver up over $1 today, same story. They've just been pretty much doing nothing, seeing money come out of the market, going to the sidelines, and all of a sudden, are we back onto a risk-on type trade? Who knows? Wait and see how we start next week. We do have a short trading week coming up, so maybe a little erratic, but we'll have to wait and see if it is risk on now again or not.
All right, let's get to the commodities. Let's talk about wheat. The harvest, we heard, is coming down quickly, but what's that market doing? It's heading up.
Right, getting a lot of spillover off the other grain commodities, corn and beans. I think wheat is a follower of corn still here short term. I would step in around the $8 mark to hedge some December wheat up in there, soft wheat in Chicago. I think the key longer term is still going to be exports. They have been kind of in a slow uptick with parts of Ukraine, parts of FSU, former Soviet Union, having a smaller crop than expected off their hard winter kill. But I don't see wheat separating from corn right now, and still looking as a short-term upward trend based off weather.
So if you have some wheat, old crop wheat, you probably don't, but if you do, is it time to sell?
I think so. I think it should have already been sold. We've seen that contract go from July, with the commercials are pricing off of, obviously, to September, the first notice day, and the carry just isn't there. I think it should be sold, yeah.
And quickly, new crop. When do you make a sale on new crop?
That's the $8 mark that I like. I would step into there, get a nice rally starting out next week. I'm going to try to make some sales ahead of the next big crop report, July 11th. That's your next big report day. So if you can get close to the $8 mark pre-January 11th is where I'd step into them at.
All right, you talk about reports. Corn was one of those that has had a nice rally here as of late. A lot of people looking at those private estimates compared to the USDA estimates. Where were they, and what did that have an impact when it comes to corn?
Right. The acres number was huge, as expected. Stocks number, a little bit supportive. But as a whole this morning, there really wasn't that big of a market mover just based off the USDA. The average guess was might move the market 20, 30 cents. It was going to be negative, good excuse to take profits, as the corn market has rallied at times $1 since last Friday. And everybody thought last day in the month and quarter, get a big number and everybody be out. But market opened up lower for about 30, 45 seconds, and we're back trading positive most of the day till late in the session and closed it out mixed. But the acres were huge, which what was expected. The key right now is weather. We're back into weather market by 10 o'clock. July 11th, like I was saying, is the next big report. The key is going to be how many acres south of I-70, really south of Decatur, Evansville area, are going to be pretty much totaled out. And that'll be key, how low the yields go. My personal opinion right now is the market is trading about a 155, 157 trend line yield. USDA is still 160. So I think there's still a little bit more short term to the upside. I would be making sales between 660 and 680 coming into the July 11th crop report.
All right. Anything else on corn? I mean, it's been dry. Is that impacting the market, or has it been more the acreage since the biggest crop, most acres planted since 37? Is that more of the driver?
Right, a little bit, not much. I think that's in the market. Right now, we're going to be trading weather for another 2 weeks, and then the carryout number on July 11th. I think we're within 10 days of maybe being a total disaster. I think even the western corn belt west of the Mississippi, which has been kind of sitting around on the fringe, could have an average crop, maybe lose it yet. If we don't get some rain, I-70 on south, it could get serious fast. East of Mississippi is already in a dire situation, needs some rains out there fast. Friday afternoon, we did see a little bit of rain moving across I-80 north areas, but that's not going to be enough to satisfy the crop at all.
Talk soybeans, they're also hurt. They need a drink as well. Is that the big driver for their market?
Yeah, we're still in a weather market there. We did see big acres today. That was bearish there, the acreage numbers were. But I think the actual bean acre number could be lower. I don't think we're going to see the big double crop acres down south based off the dryness. Just too dry to plant beans right now.
So some were thinking of doing a double crop, and they've said no because they haven't got any rain.
Right, saying no as of right now. I think there's still maybe a weak window that guys would try to double crop yet, but if it stays like it is right now, there's probably not a very good chance of seeing that 76, 77 million acre number.
And you've been around Iowa most of the week getting to look. What do you see, corn, beans? Does it match up with what the reports are saying?
Just across I-80 and up I-35 this week didn't look too bad from that window. I think obviously the soil moisture is depleting fast and needs some rain fast. I think it could turn serious mid to late next week. If everything stays like it is now, it could turn into a dire situation. You throw in a couple of rains, though, I think we're fairly priced right now. Along with pricing this new crop stuff at 660, 680 coming into the July 11th report, I think producers ought to be looking at the Red Christmas Dees 13 contract. And I'll be looking for sales up there around the $6 mark the next 2 weeks, and sell the futures contract, risk a stop close over 6, and take advantage of that as well.
All right, we'll cover cotton in the Market Plus, but let's move on to the livestock here. Cattle had a nice week last week, rallied a little bit towards the end of this week. Where are they headed?
Right. I think there's still a little bit more short covering to come. Like you're saying, a nice midweek, late week rally. Cash didn't do that much. Steady most of the day on Friday at 116. But technically, we saw a bounce. The stock market rallied, pulled some short money out of the market, and we saw some double bottoming action. I think you could take the October live cattle contract up around 127. Start to look to make sales there on a nice correction. Same way with the feeders, double bottoming action this week, so a bounce Wednesday, Thursday, at times on Friday, and I think you can get the August contract up around 154 to sell into. But just looking for kind of a dead cat bounce to sell into, relieve the oversold technicals, and start back over again.
There was a report this week that I saw out of Arkansas. They're starting to liquidate some of those herds, biggest number cuts in quite some time. It's just been too dry. Texas has rebounded. Have there been buy-ins to Texas, whether it's live cattle or feeders? Are they starting to beef those herds back up, I guess, is the bad pun would be?
I would say slowly they may be trying to. I don't think it's anything that the trend has shifted around and pointing straight back up. But I think it's something to pay attention to longer term as we get into the winter months. I think the contracts, third, fourth, first quarter live cattle contracts are fine. I think you put a $2 to $4 cash rally into those and see what happens. But just something that we'll keep an eye on.
Big day for hogs. There was a report about what was that report about, and what did it tell you?
Right, quarterly report there in hogs. Surprisingly, it wasn't a surprise. Pretty much neutral report today that we saw. What that report reiterated to me is producers need to be really nimble with their fourth quarter through second quarter of next year's sales. And that's talking 82 cents for December and looking out into like February, April too of the 2013 contracts. I think the numbers get big out in there. We're seeing some expansion, and of course some will play out. We see how the corn plays out, but I think the 82 mark in December to step in with some hedges there next week.
You have anybody expanding herds on a big scale, or is this more of a kind of a cautious dip their toe into the market and expand?
Cautious right now. I do have some guys that are expanding, not on a rapid pace. They want to see what the corn market does, see if they can get corn locked in at a decent price before they take a big step.
So again, livestock is still hinging upon what that corn price is going to do.
Right, and also how are the guys hedged up? Is it all forward priced already? Can their break-evens work? But yeah, livestock, feeder cattle especially, the deferred hogs, deferred cattle, based off this corn market, can we go back up to where we were last year, 775 or not, if we turn into a total disaster or not? I think rallies are going to be hard to hold in grains just because of the fund money.
5 seconds, your pick of the week is?
I like buying breaks in corn still.
Okay. Jamie Kohaki, thank you so much for your market analysis. Always good to have you here on the program.
Thank you.
That'll do it for this edition of Market to Market, but if you'd like more information from Jamie on where these volatile markets just may be headed, visit the Market Plus page on our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, and also links to our Twitter feed and our Facebook page. Guess what? It's all free at the Market to Market website. Now, many of you have posted comments on those sites in the past weeks expressing your sentiments on the passing of Mark Pearson. We thank you for your support and want you to know that Market to Market will name a successor in the weeks ahead. The new host will be rooted in the same tradition of Mark and Chet Randolph before him, and we believe viewers will be pleased. So until next week, thank you so much for watching. I'm Paul Yeager. Have a good week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.